Nonprofits and Fraud, Protecting the People You Serve was a live webinar that was originally produced on Thursday, May 25th, 2017. The presenters for this presentation were Janice Snyder, David Hammerberg, and Jim Schellenberger, all with McKonly and Asbury. Enjoy this webinar recap and visit us online at www.macpas.com for more information about our future events.
Thank you, Tyler. My name is Janice Snyder, and I'm a partner at McKonly and Asbury, and I lead our audit segment. I spend a significant amount of my time serving nonprofit organizations as well as healthcare organizations. So I'm pleased to be here today with two of my colleagues, and I'll turn it over to Dave.
Thanks, Janice. My name is Dave Hammerberg. I'm a principal at McKonly and Asbury. Been here a couple years, 17, and I head up the fraud segment. Handle fraud investigations, and as well as do some security reviews. And we are also doing this webinar with Jim Schellenberger.
Thank you, Dave. Jim Schellenberger. I'm a principal with the group. Have not been here as long as Dave, so those on the call can figure out the math. I'm a little bit younger than him. Been here 15 years, and I concentrate my practice in the not-for-profit area as well as working a lot with Janice and some others in the affordable housing industry as well. So glad to be here and look forward to spending the next 50 minutes with everybody talking about fraud. So Dave, I'm going to kick it back to you and let you go over some stuff.
Thank you, Jim. Before we get into the agenda, I thought I'd just put a slide up here for news headlines. It seems like every day or every week at least, we're getting new headlines of different frauds. And here are just three that are fairly current. Pennsylvania recently prosecuted 45 people for welfare fraud. They're hoping to eventually receive $315,000 in restitution. We'll see how that goes. But again, the fraudsters were charged with fraudulently receiving public assistance. So, again, these are just current events. The second one, man stole more than $6,000 from Boy Scouts. Now, we've done a few investigations similar to this. In this case, the individual stole from two, I think it was a troop and a Cub Scout, and a total of $6,000. And it doesn't sound like a lot, but if you think of a budget for a troop, it's not a ton of money. So $6,000 could be a quarter, a third of the budget, or maybe even more.
Maybe even more. I would think so.
So that's significant, and that individual, is stealing not only from other kids but his son, most likely. So it's it almost makes chills up your back that someone could be a little that devious. Former PTO president, the next one. This one, we've actually investigated PTOs in the past. This former PTO president stole $8,400 from the teacher's school supply over 2 school years. So again, $8,000 budget in from a PTO is significant.
It's a lot of pencils and erasers, Dave.
That's right. That's a lot of fundraisers. That's a lot of Hershey Park fundraisers. Yeah. That's a lot of, a bunch of different things.
A lot of field trip funds, too.
Yep. And a lot of times, we're, definitely with PTOs, it doesn't seem like there's a whole lot of, the funds are commingled. A lot of times that's what we see is the individual and the school will be commingled. So, that would be the first thing. If you were in a PTO, you want to make sure things are separate. But definitely some current events. And I think we see these almost every week. And maybe a few years ago, 10, 15 years ago, we'd see these once in a while, and maybe just because they weren't reported as much. But now they're almost commonplace, and we see them, and we don't get astounded. So that's a worry of mine that, hey, we see these every week, and we're not like, oh, my gosh, that firehouse down the street had fraud. We're almost commonplace. It's like violence in movies. The more we see it, the more we're just, all right, well, it happens. But anyway, those are the news headlines, and we'll jump into the agenda.
Great. So thanks for setting the stage, Dave. We're going to spend some time today talking about some of the recent fraud statistics. Then we're going to focus very briefly on the fraud triangle. If you're not familiar with that, we'll familiarize you with that. We're going to go through 3 case studies and some of the lessons that you can learn from those, and hopefully at the end here give you ways to implement the following best practices. So we're going to talk about those best practices, see what some things you can practically do in your organizations. Hopefully a lot of you are already doing them, and this is just a reminder, and hopefully you learn something new from those best practices. And we'll leave some time at the end for your questions. So I'm going to send it back to Dave to go through some of the fraud statistics.
Here are some fraud statistics. These are taken from the ACFE Report to the Nations. And it's a report that's done every other year. And it's a report that is a combination of frauds that were submitted by CFEs, Certified Fraud Examiners. I think it has some telling statistics, and here are a few that are pertinent to nonprofits or go along with nonprofits. The first one, 5% of revenues in a given year are lost to fraud, and that goes across nonprofits, corporations. There's really no difference. So that could be a huge amount of money, and we'll get down to another statistic that's even more frightening in regards to large organizations and small organizations. But again, 5% of your revenues.
I think of many nonprofits, Dave. I mean, 5% of their top line revenue, that's significant. I mean, that could be doing so much more mission and serving so much more, so many more individuals with those funds. That's just a shame.
Yeah, think about how hard you work for that $100 contribution. And you're fundraising, you're soliciting, you're spending a lot of time and effort, and 5% right off the top.
Correct. Yeah, I mean that $100 of revenue, 10% might go to, administration function or whatever, and you might, as an organization, only receive $80 worth of that. And then you're going to lose 5% of that. So it could be definitely a big issue. The second one, the median loss for nonprofit cases was $100,000. So think about your organization. Can you handle losing $100,000? Think of that first statistic. How do you know you're not losing 5% of revenue right now? Can you tell me you're not losing it? How do you know you're not losing it? Do you have controls in place to say, to prevent it, to detect it? A lot of times I do a lot of security reviews, and you say, have you been breached? Well, I don't know if I've been breached. I don't have the tools in place to know if I've been breached. How do you know you're not losing 5% now? A lot of these investigations that we do for nonprofits will last years and years, and people just don't know. So we got to make some changes to figure that out. The last one there, frauds are more likely to be detected by tip than audits. I think the statistics coming up, I think it's 82% of the participants of this study had an audit done, but all of them had a fraud occur. So I don't know about you, but that tells me that an audit is not sufficient in preventing fraud. Occasionally, I think we detect fraud with an audit, but it's not going to prevent it, and it's rarely going to detect it because, in my stance, you can be very prepared for an audit when someone walks in. They're asking for samples, and you have days to literally Photoshop those samples. I mean, we do the best we can. But I think there's, for a good fraudster, there's ways around it. What do you think, Jim?
Yeah, if you're relying on your audit to be your most significant and important fraud detection tool, you're in trouble. I mean, that should not be your number one deterrent.
I think it's like using semantic antivirus for your security software. If that's the thing you're betting the house on, you better find a new house.
I agree.
So the next slide here, and again, this is a deep comment here. The longer the fraud goes, the more money it's going to cost. Not very deep, but anyway, the last sentence there. Any schemes that lasted more than 5 years caused a median loss of $850,000. That's huge, and I would say the majority of nonprofit cases that I've handled probably have gone between 2 and 5 years. So it's significant.
I've seen an organization with less than $10 million in annual revenue, and they had an extended fraud over a number of years, and they estimate they lost $5 to $6 million. That's just astounding for an organization that's of that size.
You think about the nature of a nonprofit organization. largely comprised of volunteers who are doing a lot of the controls and processes to, that you would suspect that would stop fraud from occurring. They might be in that position for 10 years, going undetected, not looked at. I certainly agree with you here, Dave. It's scary.
I mean, say we have fraud in the organization, and Jim's our treasurer. He's been there for 10 years.
You don't want Jim as your treasurer.
We'll call him the fraudster. He's been there for 10 years, and he's doing a lot of work. He spends, who else wants to do his job, right? Who wants to question what he's doing? Because we want Jim to be a volunteer. But, Jim's on the side taking a couple $1,000s a month. It's an issue. How do you question a volunteer, right? We all love our volunteers. We want people to volunteer. And I'm not saying that volunteers are bad or they're going to commit fraud eventually. I'm saying we have to have some kind of checks and balances in there. And the last one, 95% took some effort to conceal, mostly creating and altering physical documents. That could be checks, could be false vendors, could be invoices. You'll see a lot of some pretty beginner fraud in regards to a fake vendor, and they'll send an invoice in, and that the AP will pay it, and that check will go to relatives or friends. Or
this day and age, so easy to create false documents, isn't it?
It's great.
Yeah.
I mean, it's great for the fraudsters.
Great for the fraudsters.
Exactly. Next slide. Here's the statistic that I think worries me the most, or should worry you the most. The median loss suffered by small organizations and large organizations are the same. Meaning, when I think of that, I think a large organization could handle, several $1 million organization could handle $100,000 fraud. What about that $750,000 nonprofit or whatever? Can they handle that? Not really. Mm-hmm. So we have to make sure that we do our due diligence and we prevent and detect fraud. Organizations of different sizes tend to have different fraud risks. The larger the organization, there'll be more corruption. Smaller organizations going to have check tampering, skimming, payroll, cash larceny schemes. And I think there's probably a whole lot of those schemes that go on that don't get detected ever. Mm-hmm. Just my opinion. External audits of the financial statements, we mentioned this before. 82% of the study had an audit, and 81% had a code of conduct in place. So, we have all these policies in place that say, hey, Jim's a stand-up guy. He shouldn't do this, and he should do this and do this. Well, how are we checking that? Just because we have a policy doesn't mean Jim can read, right?
Correct. very so.
Yeah, and he gave me permission to pick on him before this.
Yeah.
Dave, that's the second time you've brought up external audits. I mean, I lead our audit practice, and clearly our standards say an audit is not designed to detect fraud, and then they say, here's the 6 things we have to do to see if it might be there. So I think an audit can support the position that people know the books and records are being looked at, and it may in some way deter the fraud, but it's clearly not going to prevent it. And if an audit even does uncover it in the rare circumstances that we do happen to see something, it's obviously happening pretty rarely.
I agree. We just can't count on that. Obviously, we need them. We need the audit. But an audit is almost there for honest. If you have honest employees giving you the information, you're really counting on sort of honest management. The next slide. I'll go through this quickly. We bring this up in most of our fraud presentations, so I assume most people have seen this. We have 3 elements of fraud. All those elements need to be present in a fraud for fraud to occur. With one caveat: if you're John Doe and you're meant to, you're a criminal and that's all you want to do is steal money, obviously you don't need all of these to have the scheme occur. But you'll have opportunity, rationalization, and pressure. Rationalization and pressure are hard to, if you have the fraudster, you don't know how they rationalize, you don't know how their pressure is, their perceived pressure. That pressure could be a medical situation for their kid, medical situation in their family somewhere, personal debt, gambling, and rationalization. Some people are, hey, I will never steal. Some people are like, well, the tone at the top is sort of weak. He's taking money. I'll take the $500 and I'll pay it back next week. Well, and then that week goes and it gets bigger and bigger. But again, rationalization, we do background checks when employees start, et cetera. But how do you know how that person thinks? How do I know what, I've worked with Jim for 15 years, so I feel like I have a good idea of his integrity. But, you never know. Opportunity. Now, that is perceived opportunity. So a fraudster is going to look at different opportunities differently. And as a company, we want to make sure that perceived opportunity is low as possible. So, for instance, if I have a cash-based business and I put a camera above that cash register, that perceived opportunity for that employee is going to go down. Now, it could be a fake camera, and that perceived opportunity is still the same. It's going to go down. Now, if it's a real camera, I'll be able to detect fraud a little bit better because I can look at the footage. But again, perceived opportunity, we just got to lower it. And awareness is a big thing for employees. If management is aware of fraud and it's telling employees, hey, this is out there, we've got to make sure we're doing this, this, and this, opportunity is going to be lower in the perceived outlook for the employee.
I just always like when I see this, Dave, to focus in on opportunity. It is the one thing the organization can control.
The only thing.
It's the only thing when you look at the three aspects of the fraud triangle. So that's what we're going to focus on today when we talk about best practices. How do we prevent that perceived or actual opportunities to commit fraud?
And I think that the great thing about risk assessments is they look at each individual area of the company, whether you're a line employee, management, cash register, whatever. What are the perceived opportunities from that employee? Because obviously, a lot of times management's perceived opportunity is totally different than a line worker or someone in the field.
I also love your example of the security camera. In my mind, it brings up the question of, is a control a preventive control or detective control? And as we go through some of these case studies and some of the ways that we can implement best practices, to be thinking about that. Is this a prevention type control or is it more of a detective in nature?
Mm-hmm. And of course, resources for any organization is going to come into place when you're trying to put these controls in place. How much does it cost? If I put a DVR system in place and it costs me $20,000 versus a fake camera that cost me $15.99. It's going to possibly give me the lower opportunity, but maybe not a detective control.
Yep.
So,
I have a feeling, Dave, you could talk about the fraud triangle for hours.
I could, and I was told that the presentation should not be entirely on that slide. So I've accomplished my first goal. All right, jumping into the nonprofit case study 1. This is an investigation that we did. It was a few years ago. It was a student-run bookstore for a small private religious school, and it was close to Harrisburg. The total of $13,600 was misappropriated. Doesn't sound like a ton of money, but we're talking about a small private bookstore. We're talking about pencils, erasers, maybe some T-shirts. So $13,600 over one school year is probably all of the profits, or a good chunk of the profits. Might even be more than the profits. We'll call the individual with oversight of the school store Jane Doe. She was the ultimate decision maker, and very nice lady, older lady, almost sort of a grandma figure.
I bet everyone trusted her.
Everyone trusted her. We'll see in the next slide that she was there forever. And not all old ladies who are trusted are fraudsters. Just want to point that out. Or young ladies. Don't want to discriminate. Reconciliations were done by Jane Doe. And then Jane Doe had a son with a medical condition that put her behind on her bills. So these are some of the facts of the case. So we'll walk through that in the next slide. Jane Doe recently went through a divorce that added a financial strain to her already tough situation, and there's no oversight of Jane Doe. So she pretty much ran the bookstore, and she did it forever. So that's sort of the facts of the. So we're going to jump in to what kind of warning signs should we have seen, or should have the organization have seen. Now, and I'll mention this. Just because there's a lack of segregations of duties in an organization doesn't mean there's fraud. No oversight or review doesn't mean there's fraud. A combination of all of this makes you more likely a fraud. Doesn't mean you have fraud. But in this case, looking back, 2020 is always a lot nicer than looking forward, right? Or you can tell more. all of these came into place, and there was fraud.
Yeah, we certainly understand that there's lots of nonprofit organizations out there that are limited in their resources and do not have a robust accounting department, management team, et cetera, and rely a lot on volunteers or a few individuals to perform certain duties. So, like Dave said, just having a small staff that prevents lots of different controls and might enter into a situation where you have a lack of segregation duties does not necessarily mean a fraud occurs. There's certain steps that you can take to overcome that, and we'll talk about that later today. But yeah, to reiterate Dave's point, just because you have no oversight or review does not mean a fraud occurred.
Correct.
I was adamant about putting that in the presentation. So thank you, Dave.
Yeah, good. So again, warning signs of this case study. Again, we did the investigation for the school store. We found lack of segregation of duties, obviously no oversight, financial strain on an employee. Most of the frauds I investigate, there's some kind of financial strain, whether it's medical, gambling's a big thing in central Pennsylvania. So again, financial strain, and that's hard to tell. Like, I can't tell, what Janice's financial stability is or how she's doing at home, nor should I probably ask those questions. So it's hard to know those. Those
Again,
things.
the fraud triangle, you can't control those pressures, but
Yep.
you can control the opportunity.
Correct. But again, sometimes you can see those pressures. Sometimes people kind of wear it on their sleeve, and you can tell. So it's good to know that element exists. If Jim comes in and he's like, "Oh, it was a late night at the casino again. I had to walk to work because I lost my car."
But I have a Rolex on. And
There's certain things that I did an investigation. It was $1 million fraud, and the guy was a gambler, and everyone knew it. But he was there for 20 years, and he was trusted, and his kids played with my kids, and everyone cried when he left, and he brought donuts every day, and anyway, so we have to understand that the three elements are there in order to prevent or detect it. So and each piece of the puzzle helps understand what's going on. Cash-based business. Majority of the payments, if not all the payments, were made to the bookstore in cash, and Jane Doe was a trusted employee for 7 years. So all those, again, they're all warning signs. Put them all together, and there's more likely than that you have some kind of fraud. What can we learn from this study or this case? Fraud is preventable with the right controls in place. We could have taken, I think, that previous slide, 3 or 4 of those examples and prevented them and would have prevented the fraud. I do believe that lady had decent integrity, and a little bit of more awareness and more pushback from management would have prevented that fraud from occurring. But there was so much opportunity, and then no one saw that she took some money, so it snowballed.
so in that case, there was not a lot of accountability for what she was doing on a day-to-day basis.
That's correct. Yeah. And so, when an employee finds they can steal $500 one week and no one says anything, no one cares, and then when they're going to pay it back next week or the next payroll, and they need another $500, they're like, "Oh, I'll take $1,000 and I'll pay it back next month." Well, it just gets out of hand. I know a lot of frauds we do. They'll go to prosecute them and they'll be like, "Yes, I stole the money, but I didn't steal that much." So say they stole $400,000. They're like, "I definitely did this. This is how I did it, but I only stole $100,000." And we're like, "Well, did you have a spreadsheet?" "No, but I could. There's no way I stole $400,000." And we're like, "Well, we have the facts to sort of to base our accusation."
You can see how that can quickly get out of control, and the
Oh,
amounts just
real quick,
escalate
yeah.
Especially when you view it as you're borrowing the funds and I'll pay them back. And
Yep.
this was an extreme circumstance.
Especially if it's a gambling habit or something like that, you're spending money that you're not getting anything for. So that could quickly.
But you're going to win.
Eventually.
The next hand.
Yeah. So, again, those things can be preventable, and we just have, as organizations, we got to know that, and we've got to, in every project that we do, we've got to, in the planning stage, think about fraud controls.
Before we get into the next case study, I just want to remind the audience, we do welcome questions, so if you have any as we're going through these that you feel are relevant, certainly shoot those over to us. We want to answer those on the fly. I think Dave and I do the best speaking and thinking on our feet, so I think Hope so, at least. So go ahead and send those in to us.
Thanks for excluding me, Jim.
Janice is always prepared.
The nonprofit case study 2. Now, this is just a one-slide event, and it's sort of meant to be that way. This is a nonprofit adult day camp for the mentally challenged. They had a fraud occur. A total of $53,000 was stolen. It was a basic check tampering scheme where the accounts payable clerk had fake vendors created, entered those into the accounting system, had invoices come in for them, and paid those invoices, and those checks went to relatives and friends.
Interesting side comment on check tampering, Dave. I was doing a little research before this presentation.
That's good.
I know, it's pretty good, isn't it? That I was reading that check tampering is 3 times more prevalent than payroll fraud. And we often hear a lot about payroll fraud and adding more to employees' paychecks, et cetera, that way. But check tampering is 3 times more prevalent.
I think accounts payable check tampering stuff is a lot easier to do without coordination with other employees. Like, I feel like, if you're an accounts payable clerk, you have no segregation of duties, and you're decent with Microsoft Word, and, you could fairly easily get by with a check tampering scheme. Now, there's mitigating controls, very easy controls to put into place to make sure that doesn't happen. But if they're not there, it's a very easy scheme, and we see it over and over again. The second comment here, or the second point, is no forethought or planning surrounding accounting controls around collected data. This worries me more than the $53,000 fraud. Because, again, we're dealing here with a nonprofit adult day camp for mentally challenged. So what else do we have besides accounting and money to lose?
A lot of confidential and protected health information.
Exactly. So we have a lot of health checks, a lot of stuff that could be direct HIPAA violations, which would make that $53,000 look like change in the bank, or change in your pocket. And I'd like to put this out there, that fraud prevention cannot be accomplished effectively without good security controls. So if we don't have good security controls, we cannot effectively prevent fraud. We can try, and we can, maybe do an okay job, but to effectively prevent fraud, security controls need to be in place. And I think in this situation, there's no security controls. Fraud occurred, but is fraud the worst thing that could happen to this organization?
You think of that health information, you have HIPAA violations down there. HIPAA violations are extremely costly if you have that protected health information. And there are many things that qualify as HIPAA violations, but there are minimum per instance penalties of $10,000. But some of these annual penalties for violations go up to $1.5 million just for having a leak of that data.
Do you think most nonprofits that collects data like this know that they're HIPAA violations, or know of the circumstances?
I think a lot of the healthcare organizations are really in tune to this because they're dealing with it every single day. I think it's some of the human service organizations that maybe don't view themselves as healthcare, or other organizations who are collecting a tremendous amount of information because we're going somewhere and we need all this health information and allergy information and all this kind of stuff about our service recipients and those who we're serving the mission to, that potentially aren't thinking about the data that way. I think that even bridges into donor data as well. How many different charities do I give to that have my personal information and credit card information, and are they really protecting that information? So I think they're all elements of that.
I think a lot of organizations that had a $53,000 fraud or $53,000 fraud surrounding accounts payable would ultimately look at accounts payable, fix it, put all the controls in place, and not do a good risk assessment of the organization and realize that isn't their biggest risk. Their biggest risk is that health data. So again, we want to correct both, but for an organization, they have to know what their higher risks are and fix those. And really the higher risk here is HIPAA controls.
Yep.
They could definitely terminate this nonprofit with just HIPAA violations if that occurred.
Absolutely.
Great. And I see someone's actually listening to my comment, so we have a question. So Dave, I'm going to, before we go to the next case study, which is our third one, I'm going to read a question from Jeffrey. Dave, in your experience, what's the percentage of frauds that actually get prosecuted? And two, what percentage of those fraud losses get recovered?
That's a good question. The very few get prosecuted. A lot of the organizations, for one reason or another, a lot of time it's reputation, don't prosecute. The bummer there is, Jim the fraudster goes to the next accounting firm and defrauds them. So it's almost our responsibility to put an end to the situation. So a lot of, I would say, 1 out of 10 get prosecuted. It's very
And they're the ones we know about.
Correct. And then the second question was,
what percentage of the losses get recovered?
That's a great question. I think the larger the organization, the better chance of recovering those losses, just because a lot of times we'll have insurance policies in place to recover that. That $1 million fraud, a lot of that was recovered. But, you get into $8,000 for the Boy Scouts. How are they going to recover that? Mm-hmm. Most of the time, the individual doesn't have the money anymore. We'll get into our case study 3, where millions of dollars were stolen, and 2 of the individuals, there was 3 individuals really were kingpins, I guess, in the situation. But 2 of them, one had to pay $75,000 back, and the one, didn't pay anything back because they didn't have any money. So it's like, very unlikely for the money to come back in full.
Dave, I haven't seen nearly the frauds you have, because I only see the ones that would happen over my 20-year career as doing financial statement audits. But I've seen the recoveries be very, very small to try and recover from the individuals. And sometimes I'm just amazed that there's nothing there. Like, you stole tens of thousands or hundreds of thousands of dollars, and it's not anywhere. So either they're really brilliant and have it hidden somewhere, or it's just completely gone and they have no idea what they did with it.
It's at the casino.
That's the big thing. They don't know what they did with it, and they don't know how much they stole. So it's a scary situation, and I imagine once you get to that point where you don't know how much you stole, you just keep going, and it's regular day business. But good questions.
Yeah, thank you for the question.
Our nonprofit case study 3, I did not investigate this, but I thought it was a good kind of case study to talk about fraud from a donor's perspective as well as an internal perspective. Because a lot of times we talk about it internal, but I would say probably the majority of people on this webinar, they donate money to worthy causes. And what not worthy cause than the Cancer Fund of America, Cancer Support Services, the Children's Cancer Fund of America, or the Breast Cancer Society. All of those sound very legit. Yep. If I go to Jim and say, hey, please support Breast Cancer Society, I think he would.
I'd say yes.
He would support me.
You see words like Children's Cancer Fund. I mean, they're tugging at heartstrings right there, trying to get you to donate. Correct. I would absolutely want to give my money.
There is currently 1,097,000 public charities out there. So about 100,000 charities new each year pop up new. So we're talking a ton of different charities. And these charities, the fraud was $187 million in donations. It was a family effort, family scheme. There was a lot of related parties, and they, went vacations, clothing, jewelry. And it's funny because this is the case I'm talking about. They didn't have any money at the end. So they spent $187 million. And that's a lot of donations, and that could have went to a lot of worthy causes. So it's so in this I think we can go to the next slide. They allegedly inflated or fabricated the value of donated goods, and then sent those in need to make it appear that they spent hundreds of $millions on those suffering from cancer. They also hid money by an accounting scheme that involves shipping pharmaceuticals to developing countries. So it was couple different schemes, nothing that was too crazy. That seems like what's on the screen right now, a very simple scheme to come up with. Mm-hmm. But yet this went over a few years and $187 million. So we're talking a lot of money. Warning slides. And I think what I'd have to say about the next 3 slides is this is from a donor's perspective. And again, I don't know how many times I would donate, and I would never look beyond the cover of what the donation is, right? I think
Sure, you won't be surprised to hear that I do, Dave. But,
I
I look
do.
at 990s all the time.
Never do. And it's just something that, I mean, what do you, Jim?
I split my donations 50-50, half to people that I don't know at all, and the other half to reputable organizations.
So you're just gambling with the 50%.
Exactly.
So we'll find out as we go through here what are some steps a donor can do to make sure that the money is going to a good cause, or a cause they'd like. So here's a warning sign. You know, if you looked for these organizations, they were on a few worst 50 charities in America list. Now, a lot of organizations put that list out, but they were on majority of them. And it wasn't like they were on the bottom of the list. They were near the top. So obviously, something to do a Google search before you donate. And if you would have done a Google search of this organization, you would have found that it's bad news. And the James Reynolds, who's sort of the father figure here, he was being investigated, I think going back to the 80s, 90s for this sort of fraud. So, and the sad thing about this is, like you said, the Breast Cancer Society, the Children's Cancer, I mean, those names are in a lot of real good nonprofit organizations. So by them stealing this $187 million, not only did they steal that money, but they took money from other good organizations probably in the future because people are skeptical about donating. So obviously, I mean, this family is just a very selfish, money-grabbing sort of situation here, which is sad. Now we get into, I think it's a tax form. No, I'm just joking. What Janice was saying about the...
It's actually an informational return.
Very good. About the Form 990, which is a public document. And one of the things we have at McKonly and Asbury is we want to make sure all data goes out encrypted. But, 990s are public information, so it's okay. But anyway... over-reliance for nonprofit fundraisers, we can see that on the 990. We can see different things on the 990. What do you look on the 990 when you're looking at different charities?
When I go through their 990, I'm certainly looking at the mission. I'm looking at who they served and how they're serving them. But I'm also looking at their financials. So I'm like, are they financially sound? Are they managing their money well? But I'm also looking at some of those percentages of how much of their money is spent on fundraising versus their actual operations versus management and administrative. And you can see those different buckets on the 990. So I want to know that they're being good stewards of that money. And I think that's important for all the organizations on the phone to really think about what message is their 990 conveying to the public, and to realize, I mean, I think everyone knows it is a public document, but what message are you putting out there?
Yeah, I spend time looking at the compensation of top management and board of directors, and that relative to the organization's overall financial health and strength. That's a big part of it. That could be an indicator of some type of bonus plan that might need to be considered. Also look at the governance policies area. Do they have the policies that you mentioned often, Dave, the conflict of interest and fraud policies? And then I also look to see if there's been an audit done. You're required to disclose whether you have a compilation review or an audit done, and to see if that's been completed, as well as a single audit of any federal funds.
Do you ever look at, I know there's a spot in there for relatives on the board.
Related parties,
Exactly.
yeah, interested individuals. Absolutely, yeah.
I mean, there's some boards that do have that, but it sort of reads a little red flag, and these are all red flags. Not one of these things, again, means that they have fraud, or not all of them means they have fraud, but again, red flag of, maybe I should look into this more. Let's figure out what's going on here. But in this situation, they did not say they had any related parties on the board, and obviously they were related. Yep. So again, we're hoping the organizations are at least, the fraudulent organizations are at least honest on their 990 too. So I guess that's a question there.
And just so you saw on the previous slide, guidestar.org is where you can go ahead to find 990s that are published. Encourage everybody to sign up for a free account. There's no strings attached, and you can get a lot of information that way.
Mm-hmm.
That's great information, Jim.
Tyler, great job with the slides back and forth for me.
And we can go to the next slide. So from an internal perspective, so that was from more of the donor side. And again, that's sort of a different side for me because we're always investigating it, preventing it, detecting it from the internal side. So again, hopefully that was a little bit changed, a little fun for you. From an internal perspective, what can be learned? Nonprofit organizations need a strong, independent, competent board in place. If you don't, you're sort of relying on management to run its own, and it gets crazy. I mean, what's your experience with a weak board and strong management?
I definitely think that creates opportunities for things to go wrong. It doesn't mean it necessarily will, but you certainly want a strong board. Independence is important, but you want a board that's going to speak up, that's going to challenge things. There's nothing worse than being in a board meeting where no one is asking questions and no one is really invested in what's going on. So you really don't want a board that's going to check the box. And hopefully the board, as you're recruiting board members and looking to others, you want those that are really going to challenge the organization because it helps protect management and the board.
I mean, the tone at the top a lot of time with the board starts, with the organization starts with the board. If you have high integrity individuals on that board, it's going to float down. Not necessarily means if you have a bunch of crooks on the board that management's going to do the wrong thing, but again, a lot of time the tone at the top flows down. I think the culture needs to start there. And if I find an organization that has a good culture at the top, a lot of times that flows down. If they have fraud awareness at the board, the fraud awareness is going to be at management. It's going to flow.
Yep. I look at that word, you say strong, independent, competent board. The word that I look there is educated as well. I look for an educated board who is aware of the various funding streams of the nonprofit that they're sitting on the board for. How does that organization work? Are they financially sophisticated where they can review reports that they're asking from management? It's one thing to get a report that says these are my results, but to actually understand and then ask the follow-up questions that are relevant is where educated board members come to play.
And I think it's nice to have a board of different expertise. If you have one expertise on there and everyone's like, yeah, that's right, but you don't have someone thinking outside the box. It's always nice to have that one person thinking outside the box and has little different experiences. And again, the board, you're looking for the board to make sure they have fraud prevention in place, fraud hotlines, and fraud policies. And again, we've hit segregation of duties a few times throughout the presentation, but again, the best practice is to have segregation of duties in most of your activities. No one person should dictate everything. In this case, I think it was the COO, pretty much did everything. And so they pretty much wrote themselves checks. And that $87 million didn't take long to disappear.
Look at your previous a couple previous slides. So Tyler, you don't need to move it. You talked about inflating donated contributions, right? That's probably done with a journal entry, right? Recording that activity. Who's reviewing journal entries? And that's what comes up in my mind here. Was the CEO, CFO the one making those entries to artificially inflate the top line revenue and then ultimately the expenses as well to make them look like they're doing a great job? Who's reviewing the journal entries in that situation?
Yeah,
Probably nobody.
Exactly. I mean, most frauds, either they're too busy, they're too successful at business, and they're doing great, but they don't have time. I hear that all the time. We don't have time. We don't have resources. But do you have time to lose $100,000? How much?
I would.
You got to take that time and make sure you do things correctly.
So, Dave, we do have a question that's come in. How much does a fraud investigation typically cost, and how long does it take?
Fraud investigations, unlike audits, are always different. So if we're talking $1 million fraud, it could cost upward of $200,000 to, if it's a really complex fraud, if it's, if you're subpoenaing, working with detectives, subpoenaing records, and those records, bank records, casino records, Visa records, household records, So, again, that could be a very costly affair. If we're talking about the local PTO, you might look at $5,000 to $10,000 or less. If it's an $8,000 fraud, it's very simple. You could be looking at $3,000, but it's not going to be much less than that.
Thanks, Dave.
But again, prevention is going to be a whole lot cheaper than investigation. If $1 million fraud and we did a prevention, I think, it would have cost them a fraction. So I'm always pushing fraud risk assessments, stuff like that really will prevent and detect fraud sooner and cost you less in the end.
Dave, while we're on the topic of segregation of duties, we do have a question that came in. I'm going to push it to Jim, get his thoughts on it. What do you do about segregation of duties when your AR clerk does the bank deposit and the bank reconciliations?
One area that I would think about when this, and the idea of segregation of duties is obviously to split the task. I would look, is there anybody else who could actually make that deposit at the bank? Is there a controller that could do that? A lot of times you'll see the board treasurer. If it's a small enough organization where the board treasurer, the volunteer board treasurer, is part of that, they could be the one making that bank deposit as well. And I'm going to ask Dave for his thoughts as well.
Can you read the question again? Sorry about that.
You're writing.
What do you do when the AR clerk does your bank deposit and the bank reconciliations?
I guess I would also look at what else can they have access to from a accounting system perspective. Are they able to record and post certain entries as well?
There's a lot of things that go into that. Do you have the same accounting package? Is it all integrated? Mm-hmm. I've seen where they've had a different point of sale system and an accounting system, and they have someone separate supposed to make the deposit. And it all depends on the organization, how the procedures go. In the fraud that I'm talking about, there was, and it's always a red flag for me if everything's not going in the same system and you have import-export, because it makes it a lot easier to get out, transactions in there. So, segregation of duties is, there's no book that says this is the way it's got to be. Every organization might differ, but this had two accounting packages, GL and point of sale, and they had a different person other than the accounts receivable clerk make the deposit. But that person was stealing money. Oh. So they would change the deposit, but since it was a point of sale system, that person also handled the journal entries. So they kind of reconciled it on the GL side. Mm-hmm. So even though there was segregation of duties between the AR and the depositor, there was still an issue. So again, there's no, hey, this is the way that's going to prevent fraud. Every organization needs to do a risk assessment and understand what that.
With that, some organizations are sharing here that they have a different person make the deposit, but they also have remote deposit entry, and they can always go back and see the scanned checks. I think that works really well if you have checks and you have ACHs and things, but cash coming in, that could create a problem as well. So I think that's a good idea.
Cash is always like that. The illustration I was giving, that's what was stolen. So that is really, checks aren't, I've seen checks stolen, but most of the time it's the cash. Yes. Going back to that previous question, I didn't answer the length of the fraud. I'm thinking I forgot something. So that length of the fraud is going to be different. But again, it could be a couple weeks if you're not getting records from outside sources, or it could be 2.5 years.
Mm-hmm. You've had some go on very long.
2.5 years is probably the longest one I've gone on. And that one, and that's just the investigation part. Prosecution, et cetera, is years after that. So,
what's the shortest one? If that's one of the longest, what is that? A few weeks? I
would say probably a month or two. If you have a small organization and all the records are internal, everything's available, it could be fairly short. But that's rare.
All right, we'll let you get back to the best practices as we keep interrupting. But these are very good questions. Thank you.
And keep sending questions in, please.
So best practices, the second one on there is fraud awareness. I mean, again, I think that is an easy thing to do for an organization. It doesn't cost any money. Let people know that, hey, we're worried about it. This is what we're doing to protect it. And I think fraud awareness comes after you understand what your risks are as management. If I have a high risk around, cash leaving the register, I'm going to make people aware that, hey, we're taking procedures to make sure that doesn't happen. Walmart always puts out, and I find it funny, hey, we caught this cashier stealing $138 from the cash register. and they have it on Penn Live, and I'm like, people are like, $138. But that goes a long way to the next cashier down the road.
Yeah.
They're like, hey, I steal anything, I'm going to end up in the paper, and I'm out. So I think I wish more organizations had that mindset.
Dave, I have a list here. I call them easy controls, and I'll be happy to share them with anybody on today's webinar. If you just send me an email, I'll send you the link to the article. But one of them is transparency, and Walmart being very transparent in what they do is a very easy control.
Mm-hmm. Yeah. Trust but verify. Again, this is... I trust Jim, but again, we might have worked together for 15 years, but you still have to have checks and balances. And I think one of the things, when I said before, is you need to have security controls in place in order to have effective fraud controls. You can't just put a security control in place and just hope it works. You can't put a fraud procedure or control in place and hope it works. We need to verify, make sure they work. We don't have backup runs and hope they work when we have a disaster. We restore things and we do tests. So just in that area, we have to do it in this area.
I think of trust but verify a lot in terms of an audit. Like, I want to trust my clients. I want to trust that they're always telling me the truth, but it's my job as the auditor to go verify that. And I think management needs to internalize some of that with some of their processes to say, oh, I trust my employees and I want to trust that they're following the processes, and hopefully you have good processes in place, but you need to verify from time to time that they're really doing what they're supposed to be doing.
It's all about communication, because if someone came to me and said, I want to look at all of your stuff and I want to make sure you're doing it right, well, that doesn't come across real well. But you come to Jim and say, hey, as an organization, we want to really prevent fraud. We want to make sure that we maximize bonuses. We want to make sure that we have money for this and this. And for all of our segments and everything, we want to make sure that the controls are in place and to prevent fraud. Well, Jim's going to be like, hey, that's great. I would love more bonus. I want to make sure fraud. So it's all communication. Yeah. When we do risk assessments, it's not, hey, we're going to find the evil person. We're going to make the company better. And we truly are. So we just got to remember, communication is a good thing. Fraud hotline, again, that is huge in tips. A lot of frauds are found by a fraud hotline and employees. It's a unanimous way of saying, hey, I saw Jane Doe. She walks out with 12 computers each day. I'm not sure what's going on there. Maybe she's recycling them. But it's good to know, some of those tips will lead to a fraud issue.
Fraud hotline sounds like a great idea, Dave, but it also sounds expensive. So for a small nonprofit organization, how do you go about setting up that type of fraud hotline?
Not real expensive. There's a lot of businesses out there that do that now. So you can contract with them, and they will be able to receive the calls anonymously and report that information. So it's really not a whole lot of excuse to not do it. And on top of my head, I don't have the list of those vendors, but there is, and I think even the AICPA promotes one of them. So they're definitely out there, and it would be a costly affair, and a lot of large organizations do it internally. Mm-hmm. But a lot of small nonprofits and small organizations, would be better served if they.
That's great.
If they went to a
great tip
contract. So strong independent board. We talked about this pretty good. We want to make sure that that tone at the top flows down. That individuals on there have different experiences. And that fraud awareness is a huge thing for them.
Yeah, we touched on strong independent board earlier, Dave. We have a question that has come in, like, what if you are the controller working with a very small nonprofit and the executive director doesn't want to review your work? So a lot of things rest with a controller. I think this is an occasion where a strong independent board can really help with that. I mean, I've been treasurer of organizations in the past, and I want to know how the controls are working, what the checks and balances are. I want to understand those processes. If that organization has to be audited, those processes have to be documented in some form and given to the auditors. And as the treasurer, I want to know that. So I think a strong independent board is one of the answers to that question of what do you do if the executive director really doesn't want to be all that involved in the finances.
A lot of times executive directors may not have the expertise in the finance area. So a strong board most likely will have someone on there with a strong expertise in that area. So, it's not, it's nice when the executive director can handle it, but sometimes that's not feasible. There's, I'm sure, plenty of executive directors out there that really don't have the financial expertise that would be great for reviewing something like we're talking about.
Yeah.
Know your risks. Only way to know what to mitigate. We're doing you got to do risk assessments. You could do internal risk assessments, external, but you need to start somewhere. In order to mitigate stuff, you need to know what the vulnerabilities are.
You got to pay attention, right?
Pay attention. And you need to have an expertise in that area to understand what those risks are. And just like we say, every fraud's different, every organization's different, and every risk assessment's going to be very different for each organization.
Sure. We're going to take advantage of our last 2 minutes here. A question has come in. Why would a nonprofit want to cook the books? Stealing I get, but we don't pay taxes.
Yeah, I mean, when you think about fraud, it's the stealing and the theft is pretty easy to think about, but cooking the books is often thought of secondarily. And for a nonprofit, there's no real incentive, you would think, to inflate your income because you don't pay taxes. But you have the perception in the public eye that you want to be a strong organization, that you want to show progressive growth and contribution growth, or perhaps you want to appear to be needy from a perspective of a potential donor. Perhaps you have federal dollars that you're trying to match, and recording an extra accounts receivable and revenue to match those federal funds would be a reason why you would cook the books.
Possibly you want to keep your job.
Yeah.
There's definitely different situations, and I think there's as much, and this is my own opinion, as much fraud in nonprofits as there is in for-profit.
Yeah.
Just because you don't pay taxes or whatnot is definitely not a fraud prevention control or policy that's going to be effective.
There's compensation models for nonprofit executives that are tied to financial results. Mm-hmm. So that's another real big reason why cooking the books would be thought of when you're looking at fraud.
Great. So one more question for Dave before we wrap it up. If a fraud is to occur even in a small organization, should we prosecute? I'm worried about the public becoming aware, even if the dollar amount is small, maybe not small to the organization, but you don't want to lose future donations. I mean, reputational risk is huge.
Our recommendation has always been to prosecute. If you talk to detectives, et cetera, I mean, it's always going to be to prosecute, and the reason being you're preventing that person going to the next organization and doing the same fraud. I've seen fraudsters go from one organization to the next organization, and because of HR regulations, and I'm no HR expert, but you can only say so much when you call to that other organization and say, hey, did Jim work for you? Yes, Jim worked for me from January 1st, 2009 to 2014. And what else can you say? That's about it. Yep. So prosecution is a good thing, I think. And again, the reputation may get a hit, but again, you're doing the right thing, and it's going to show fraud awareness for other employees. Other employees are going to think twice about doing it.
Short term, it might hurt, but thinking long term for the long.
You caught what I had.
I did catch what you had. The longevity of the organization, I think, doing the prosecution is the way to go.
I mean, it's all about communication, getting ahead of it and having a plan. Just like when you have a fraud risk assessment and you're doing a project, you have fraud and security in your plan. Communication of that fraud, that prosecution, getting ahead of it is going to make, instead of pen live catching it and you have, your employees don't know about it, et cetera. You got to have a plan, got to think about it, communication.
Great. I do see we're out of time. I thank everyone for joining us today. We do have a few more questions. We'll reach out to you personally. We have your emails from when you registered, so we do appreciate all of those questions, and I hope you all have a wonderful afternoon.
Thank you once again for joining us for this presentation produced by McKonly and Asbury. We hope you join us for our upcoming events. You can stay up to date with news and learn more about our upcoming events by visiting us at www.macpas.com. Thanks again, and have a great day.